Hey traders and investors, it's Chris VERMEULEN from the Technical Traders. We continue to see our portfolios continue to climb and grind higher with this market. But let's dive into some of the nitty-gritty short-term analysis and then keep stepping back to the bigger picture of what's going on in our positions and how we need to manage and attack this market. Now, overall, here's the QQQ. We had a pretty big pullback last week. We saw one big day of selling on the big, large techs. Everybody started to scream the sky is falling over one pullback when the previous day was new all-time highs. So a one-day pullback isn't enough to freak out. We have seen several days like this, waves where we see bouts of selling in the market, and that's what happens during a rising trend. When we step back and take a look, you can see the trend just continues to rally and pause, a bunch of pullbacks along the way. That is just how the markets move. Now, when we look at the 30-minute momentum chart, we can see here that the market has gone from an oversold territory, this lime green, this is the QQQ, regular trading hours only, and we had panic selling with our panic selling indicator. Typically, when we get those readings, we start to see the market take off and move higher. Now, we had some whipsaw price action and a distribution selling day back over here. This was July 1st. We had another one, the one I just talked about right here on the daily chart. We had another one just a few sessions ago with a big sell-off. These are somewhat typical, normal in this type of market condition. And now the market is kind of chattering, trying to figure out what it's going to do next. Now, we do have some overbought indicator here, FOMO. A lot of people were covering shorts. A lot was going on. Usually that can mean the market's going to have a bit of a pause or pullback. So I wouldn't be surprised when we look at the daily chart that this potentially could turn into a multi-day, multi-week pause, or maybe even unfold over a longer period of time. When we look at the big trends, it rallies, multi-week pullback, rally, multi-month pullback, and we are getting due for potentially another type of pause or pullback. So that should be expected. Today, we saw bonds take a pretty good haircut. This is a pretty noisy chart, but overall down over 8% today. We also saw utilities, XLU, down very sharply, 2.5% today. And the precious metal space and the miners were down. This could be interesting. I have a feeling a lot of people are expecting the Fed to cut rates. They've been expecting that forever. I don't know why, because there is no pain really in the markets yet. Investors aren't really losing money. So why would the Fed do much in terms of that? That's how I see it anyway. Until stocks are getting hit and real estate's getting hit hard, and there's a lot of pain everywhere, the Fed isn't going to do much. So I have a feeling some insiders got wind that the rate isn't going to change, and that is bearish on bonds. People have been chasing bonds, betting that the rates are going to get cut, which is why we've seen a big rally over here, and then those dreams faded away, and now they're back into thinking that the rates are going to get cut and bonds will go higher. But if rates aren't going to happen, we're going to start to see bonds break down. And utility stocks and companies carry a ton of debt. And to service that debt, if interest rates are going to stay high, it's going to really hurt this company. I think utilities really had a big rally of everybody talking about a rate cut coming. And now I got a feeling people are like, ooh, maybe the rate cut's actually not coming. And these utility companies are going to have some huge interest rate payments on all the debt that they carry. If we go take a look at the precious metal space, we do have gold continuing to push, and it's on the verge of another leg up. If we use Fibonacci extension, we can get an idea of where these moves should go. And more or less, we're looking roughly around that 2650, 2750 to the upside. We can, let me just grab the pencil here. We get a rally, we get a pullback, we get a rally, and potentially up to around this 2750 on the chart. So there's lots of upside. This is a very nice bull flag pattern. Looks like it's on the verge of breaking and extending to the upside. Silver also is pushing down a little bit today, but it is threatening here to pop with a high momentum move and take off again. And of course, gold miners actually started to break their recent highs, and this is a somewhat of a bullish sign in the market, and they're leading the way. So it'll be interesting to see how this goes. It is definitely a volatile chart for the miners. I like gold itself, physical gold. Out of all the plays, gold is still my favorite. It's low volatility, cleanest setup. It's the most favored defensive play, so money around the world will buy it versus just like North American speculators piling into miners or silver. They carry more risk, and they're more random than gold, I find. So that's going to be interesting. I did have spend an evening with a few traders. I don't know if you guys remember. I know Tom Broderick from Palisade Radio right over here. And we had Jamie Carasacco from Canaccord Genuity and David Brady, very big into the precious metal space. And it was a very interesting night talking precious metals and what's going to happen. And definitely gets you pretty excited about the precious metal space of where gold, silver, and miners are going. And I really do like them, not just short term, but long term. I think there's going to be a huge reset. They're talking about the BRICS and a currency coming, a currency change when there is a financial reset. Definitely some deep stuff, way over my head, but it is really interesting to hear those points of views and the things that are unfolding. Now, if we take a look at the big picture, again, we have our weekly chart of the SPY. It tells us if the tide is rising, if the tide is falling, and of course, we are in a rising tide in general. Overall, when we are in a rising tide, we're going to have a series with our strategy. We're going to have a series of longer trades that make us a lot of money. You can see what happens during those rising tides. And a falling tide, we have very short-lived trades, and we trade more often different assets, either bonds or in this case, in 2022, it was the US dollar index and a cash, a BIL ETF to safely make money. While the stock market moved down about 24% that year, or the 60-40 portfolio, we ended up locking in about 6%. So that's about a 30% spread from what people experienced doing nothing or trying to trade their own versus navigating these markets, these blips and dips along the way. Now, if we hone into the shorter term analysis, you can see our shorter term trades, our buys, our targets, our exits, our reloads. Throughout here, we've already hit targets with QQQ. We're very close to hitting another target, 10% on the most recent QQQ trade. We are seeing sentiment favorable. Orange bars here on the chart, orange and red when we are in an uptrend, typically mean the market's going to want to go higher. Orange means people are scared and nervous, and after people start to bet on the downside, they're selling their positions. Just like over here, we tend to see the market extend higher each time. So that's kind of where we are right now. The market is having a little pause, consolidation. People think the sky is falling. And again, it's a wall of worry. This market could very easily pop and rally and catch everyone off guard again, going, how can it keep going higher? A lot of people are exiting and betting against this market. We talked about it in last week's video. If you didn't watch it, make sure you check it out about the SQQQ and how we could see the short squeeze. We saw all that happen. And it's very important to understand the sentiment and money flows of what people are doing. And the markets are still pointing to higher pricing. Now, if we take a look at the SPY, I kind of zoomed out here. I kind of want to just show you guys kind of, the value, a good chunk of the value of what we do. We're long the SP 500, and I want to just kind of show the difference here of our strategy versus, for example, the buy and hold, the 60-40 buy and hold portfolio. While this market goes through these moves here, the bottom here is the 60-40 portfolio. And if we take a look at the volatility that somebody who has an advisor is just buying and holding, you have gone through a 24% pullback, a 24% drawdown in price. And then you went through this huge recovery in 2023 and 2024 to where we are now, and you're not even back at break even. And in a nutshell, from the highs, the average investor is still down 3%. And we've had some people, they just don't understand the concept and the expectations and how things go. People are like, well, we're dramatically underperforming the SP 500. We should be, crushing it. It had a huge run, in 2023 and 2024. But here's the reality. While most portfolios are down and going through these wild gyrations, if we were to take a look at what we do and how we do it, this is that same time frame. You can see how this thick line here is our strategy. We consistently just work our way up and to the right, low volatility. And of course, the green line here is the 60-40 portfolio, and the blue is the SP 500. Now, this is over the past about 30 months of how things have been unfolding. And the key here is that we continuously see our accounts pushing new all-time highs. We're pretty much at new all-time highs now because we've got profits in our SPY, profits in our QQQ. We're bringing in dividends from our BIL position, and we haven't booked those profits on here yet because they're not closed. So we are sitting very pretty, and we are still performing and outperforming the market in general, overall, both short-term and long-term, without the volatility. And that's what people don't understand is, you could say, hey, we're really just keeping up with the SPY, and people keep saying, we're not keeping up with the SPY or QQQ, but that's not the proper expectations. Nobody's ever really going to be in their normal portfolios, buy and hold or something, 100% into those. Not the way, that's just not how people do it. We do that in a way. And when we look at the long-term picture, you can see our strategy, which is why we call it CGS, the consistent growth strategy. We just consistently move up, slow and steady, and we dramatically outperform the SP 500, the 60/40 portfolio. And that is where our value is. We cut down the stress. We don't care what happens. It doesn't matter what the elections do, what the Fed does, rates go up. It doesn't make a difference in our positions because we follow price, we identify and manage positions, ride those waves, and that is the whole point of what we do. You don't have to worry about the future because we're going to be able to take advantage of it. We're not going to be riding a bear market down, which is what everybody's worried about, other than you guys, because we're in here navigating these markets. In fact, we actually want a bear market to profit from and then reinvest near a market low with all kinds of opportunities. So that's kind of where we are in a nutshell when we look at those markets. Our strategy is consistent versus somebody who's buying and holding or active trading in individual stocks, struggling through all of this. Now, one last thing I just want to mention, my friend Mike Higgins, he's in this favorite chef competition. This is a fundraiser. It's about regenerative farming, a sustainable future. It's about helping educate chefs and bringing like farm food to the table in a dining experience. This is somebody trying to help him get on the cover of a magazine. He wins some money, gets to spend some time with one of the top chefs in the world. And so we can all vote for him if you don't mind. It's free. You just click on the vote button. You come down here. You can place a free vote every 24 hours. And I think tomorrow or the next day, there's double vote days. So if somebody wanted to do double votes, you can do that. But again, this is supporting a good friend, a local person who's all about trying to educate the world and show them how good farming can be. He could really use your support, and I'm helping him as much as I can. And it's all about helping the small people and educate the masses on what we can do with regenerative farming. So I'll put a link below for you to hopefully go and check that out and place your vote for the next few days as this competition runs with only 3 days left to go. Anyways, that's it for now. Talk to you soon. Bye-bye.